What's up, everybody? Welcome to another one of Dave's Daily Dives, where I, Dave Bartosiak, dig into the major stock market charts of the day. Talking about macro charts, so I look at the S&P 500. Today we're probably going to look at a couple Nasdaqs, maybe the Dow, look at the VIX, a couple of things, whatever I feel like talking about. But then I don't leave you hanging, because at the end of the show, that's where I give you 5 Zacks rank #1 strong buy stocks that are breaking out to new highs. So in a market like this, that can give you an edge during your trading tomorrow or the next day, because these Zacks ranked #1 buy stocks, strong buy stocks that is, have earnings estimates that have been pushing to the upside. So when they're breaking out to new highs, perhaps that is justified. At the very least, it warrants a little further investigation. All right, now, sometimes it's just magical what I see, what the stock market gives me, what it brings us. And if you've been watching these for a while, you'll know that I draw these fib levels on here, days ahead of time. And then they just kind of come to fruition sometimes. And it just hammers home that you have to start using these. So I've been playing off of this fib from the August low to that the early November high. And when I first drew it, to be honest with you, I was a little apprehensive, because I was like, well, I don't know, maybe there's not much of a retrace here, and maybe I don't know, maybe I'm stretching it. But one of the things that I did in drawing this is, not only did I give you this retracement support target of 25.54, but this also gave us the fib extension. So basically, the simple way to explain this is in the positive direction here, right? It moves, and then we call this retracement. And then anything that's mirrored over this high, right, over this axis, is then an extension of the original move. And as you can see here on the S&P 500 chart, I drew the 38.2% extension of this move from the August lows to this November high, where the market kind of reversed a little bit, and just kind of threw that out there as a price target where the S&P 500 could potentially go. And 2665.19 was basically the high on the S&P 500 a couple of days ago. Didn't get over that level and is coming back a little bit. Now, I don't know how significant this level is going to prove over the long run. Typically, they don't last forever, right? We're just in this fib structure. This is a short-term fib structure from August, so it hasn't been around for a long time. So what you want to keep in your eyes is this 0%, which was the high, right? Kind of coincides with 2600, so you can do yourself a favor, just call it 2600, make it easy. But before that, you do have the intraday low from last Friday, which gets you at 2605. So those are the levels to watch on the S&P 500 should this thing continue to march down. If it has a rally, 2665, 2666, another level to keep an eye out for, okay? So that's the S&P 500. What about the more resilient, shall I say, Dow Jones Industrial Average? Dow don't care. Talked about this before. Just reckless abandon, no thought for the feelings of the bears on this one, that the Dow just keeps on trucking, and has done so since the election. Have it leapfrogging the 50-day. Had a little bit of a period in March, April, a little bit of May, where the Dow found itself on the south side of that 50-day moving average. Found support again in August and September. Got within earshot in early November, but still just keeps on keeping on. Now, there's a couple of fibs that you could draw. So first, if you're looking for a more, I guess, intense, I could say, move, it's just the whole move from the November lows up until where we are today. It's a big fib. that ends up being below the 23.6, basically under 23,000 on the S&P 500, and below the 50-day rather. So a deeper retrace there. Now, I don't know that that's something that we should expect here in the short term. A shorter fib that you can work off is the September lows up through the current highs. I think we should steal a page out of the S&P 500's book. And let's go from the August lows to the November highs. The early November highs, rather. So I'm going to do that. And then I'm going to go ahead and do my extensions also. So, again, we're extending over the high. So I'm going to use negative 38.2. It's pretty much spot on intraday where the market sort of died out, or where the market struggled to get it here. Let me get this out of the way so I can make more sense of this for you. So you can see the market kind of being a little bit shy of that level, a little bit shy. So when you're thinking of these areas of potential support and resistance, you can't look at them as absolute level, but rather like a pressure gradient, right? And I'm really, it's hard for me to describe this other than, say it's like a shock absorber kind of, right? So pressure coming down in this direction is going to contract this, but there's still support, but it's not firm at that level. So it's not a pane of glass that's going to break there. It's more like a shock absorber that will kind of scooch down a little bit. I guess that's a decent metaphor there for you. So if you are drawing that level and using the fib from here, then you'd see 23,600 as support on a deeper retrace. Now, I'm not silly enough to say that today's candle marks any sort of reversal here in the Dow. I'm just not ready to do that. And this is still, I mean, we're spoiled based on how good the action has been on the Dow recently. So this thing could have legs. It could keep on trucking. And as part of my ZC I did the other day, I made the case for Dow 30,000, which is not as far off as you may think. So there's the Dow, there's the S&P. Last one I want to look at here is the Nasdaq Composite. Another situation where I had a larger fib structure in place. I tightened it up here, though, just to the September range. Gave us a 50% extension there. I could continue on through this. I could draw a 61.8. So let's add a couple here. First, I'm going to do the 61.8. I'm also going to do just the full extension. So basically mirroring the move that you've already seen. Add that too. And look at what you got. So what I'm doing is essentially just duplicating the move that you saw from September to here. Basically just if you duplicated that range, where does that take us? And that takes us up here. Now look. The Nasdaq has come under a little bit of pressure here. Today's candle, still bearish. Okay. So I would look for a couple levels. First, that's Monday's, is that Monday or last Friday's low, 67.37, and then you have the 50-day down at 66.75. So those are two key levels to keep your eye on the Nasdaq, because today it did not follow through on any of the sort of intraday action that would have made you think that perhaps there is a reversal coming here. Now tomorrow it could fill that, and then we're good. But the way this is looking here, it should look awful familiar. I wouldn't be surprised if we get in another situation, another pattern like we had in July and August, where the Nasdaq gets pretty choppy here as you get this slow sort of sector rotation that's taking place. And That's what I think is happening there. Okay, now let's give you 5 Zacks ranked number 1 strong buy stocks that are breaking out to highs. The first, Deere, ticker DE. They reported a couple weeks ago, and you can see the bullish price action that we've seen here. Started off that day of earnings, had a gap up, gave it all back throughout the course of the day, but then slowly but surely started to tick on higher. Now it's up over $1.50. Zoom out, give you a little bit of perspective. This has been a great stock since before Election Day, really, and a lot of the resistance was here in this 135 range. Now we're on the other side of that. You got to think that eventually it kind of gets up into this gap, but this is something that you could chase a little bit, put your stops down south of that gap, because it is a $150 stock, so even if you go 15 bucks south of that, it's only 10%, and that puts you down into this 135, sort of where that previous resistance was. So that's Deere, ticker DE. Then we got Deckers Outdoor, ticker DECK. And here's a little different story. It's not that nice, slow, and steady trajectory to the upside, but rather we've got a gap and go on earnings that stalled out, found support just above 60 bucks, and then there's been this choppy sort of upward movement that never could get up to new highs, but finally did. So, and there's been another just spat of volatility here. You do have the 50-day that's starting to curl back around to the upside, give you a little bit of a bullish tailwind there. Commodity Channel Index gave you a crossover buy signal all the way back here when the stock was just leapfrogging that 50-day down at 68. So with the recent pressure, I think it's setting up a nice little buying opportunity here as it's pulled back. So if you can get in the 73s, anywhere in there, or if you buy it here, just put your stops just shy of 70 bucks, close to the 50-day moving average. I think you'd be okay there on Deckers, ticker DECK. Then there's At Home Group, ticker Home. This has been nice little write-up from the lows. Then you have just an exhaustion of buying, which broke it into a little bit of a consolidation pattern. And then you have what I like to call, it wasn't exactly my little rope-a-dope where you have a stop grabber where they're really trying to force it down and then the buyers come in. But a choppy stock nonetheless that finally has blasted through. I think they went hunting for the shorts there. A little bit of a squeeze might have taken place there. And now it's come back down to the same area that it was resistance previously. So a couple of risks that you have here are that it breaks down below that resistance level and now comes back chopping around into this madness. But I think it's a decent little bit of risk versus reward because it doesn't look like you're standing on the cliff and a precipitous drop is right around the corner here. You see this lot of volume has gone out in this area here. So even if you buy this up at 26 and it finds its way down into the $25, $24 range, it's an area where it's very comfortable trading. And again, these are Zacks ranked number 1 strong buy stocks. So you know that these estimates now have to be higher than they were back then. So something's got to give. I think it can help lead the stock higher. That's At Home Group, ticker Home. Then you got Oshkosh, ticker OSK. I like the move higher, the retrace to the 50-day, and support constantly at the 50-day. Really trying to get up and break out here. I don't think you have to wait to chase this breakout. I think you can buy it here, put your stops shy of the 50-day moving average, sizing you up with a nice little risk versus reward entry there on a Zacks rank number 1 strong buy stock. So if the market can regain its footing and push higher, I think that OSK is certainly going to be one of the ones that leads the market higher and continues to go to the upside. It's ticker OSK. The last one I got for you is Tyson Foods. That's right, we're talking chicken, my friends. And what a wonderful month or two, really, 3 it's been, gapping up here and then just gone. Lots of bullish behavior here. The Commodity Channel Index has stayed bullish. The 50-day providing plenty of downside support here, carving out the bullish pattern to the upside. I think you can buy Tyson, Put your stops shy of $80 and be pleasantly surprised when the profits come flying in. That's Tyson Foods, ticker TSN. That's all I got for you folks today here on Dave's Daily Dive. Be sure to follow me on Twitter at Bartosiastics to check out all of my shenanigans. And, of course, I am the editor of The Surprise Trader and the Momentum Trader here on Zacks.com. Thanks for checking out my video. Talk to you guys later in the week.